The bill in many ways is a step in the right direction, and banks and financial institutions need to be held accountable for both protecting their customers and from being scammed and facilitating illegal activity. This bill we are debating today is intended to transpose this EU directive into Irish law, as was said. The directive is the fifth anti-money laundering directive. And this directive represents improvement in exposing the secretive ownership structures often used for tax evasion and other illegal activities. Regardless of the progress made, their proposal was weakened before it was agreed at the EU level. When offshore structures are protected, so too are other criminal activities. And despite that, the original directive had its teeth removed. The most important area where the original proposal was watered down relates to the issue of beneficial owners. This basically means that the real owners of companies. The idea was to stop the case where an offshore company could have a nominee director, and this individual could just be hired in name down as the owner for thousands of companies. The Panama Paper and the Paradise Papers and other leaks have repeatedly shown us that shell companies with complex ownership structures allow for tax evasion around the world on an industrial scale. We've desperately needed laws to address these secretive structures that allow the owners of companies to be completely hidden. It's one of the biggest challenges we face in making the wealthiest in society pay their fair share. Yet when this directive came back from the negotiations between the European Commission and the European Council, public access to the information was weakened, and the amount someone could own of a company remained hidden, and this was increased. This bill gives us, the public in general, more transparency in who owns what company. But people are right to ask why the information we are working with is still so limited. The threshold for beneficial ownership is far too high at 25%. Tax justice and transparency advocates argue that a single share should be enough to constitute beneficial ownership. And I think most ordinary people would agree with that. Senior managers will still be allowed to be listed as beneficial owners, maintaining another important loophole. We will still have to prove legitimate interest to access to details of beneficial ownership of trusts. On the 10th of August 2020, the bill was agreed by the Cabinet. The EU directive was agreed upon almost 2 years ago. Ireland, like all other member states, were given until January this year to pass legislation on it, and this should have been brought forward in 2019. Yet it was only after the European Court of Justice imposed a 2 million fine on Ireland for delays that action was finally taken. First it was watered down and then it was delayed. The question is, why was this not brought in 2019? Why has it taken over 2 years to bring forward this piece of important legislation? We should be bringing in stronger laws than those agreed at EU level. We know the extent of the problem, and we also know the impact of the problem throughout this state. But instead, we've seen successive governments resisting reform and blocking transparency into ownership structures and tax evasion. Now, I welcome this bill, and it will go some way towards addressing that, but I think there's a lot more that's still to be done, and I would urge government to put its citizens first and to do everything possible to stop the wealthiest hiding behind structures. We need more transparency. It's only through transparency that we can have accountability. Gurmagat.